Hello and good afternoon, everybody. Welcome to our midday update for February 14th, 12:33 p.m. here. We're 30 minutes a little bit later than the scheduled time, but this is the time slot for today. I want to do a quick market update of what's happened today. Very key event. Tomorrow is going to be a big day as well. My name is George Papazov, owner and founder here, Trade Pro Academy. I want to walk you through our agenda. We're going to talk about Janet Yellen and what she has said so far this morning and what it means for the market, how the market's reacting, and how you could trade this. That's the most important part. Then we're going to slip into looking at a few potential trades for the afternoon on both ES and CL, which is S&P 500 futures and oil prices. That's going to be subscriber only. At that point, we'll end off the YouTube broadcast, and then we're going to transition back into the live trading room and do some work there. But before we get started, I want to tell you about something that's very important coming up tomorrow. If you go to tradeproacademy.com/trade oil, this is the second last chance for you to sign up for this webinar. We're doing a webinar tomorrow on everything you need to know to trade oil futures, how to trade them profitably and consistently successful in day trading with these futures, and how strategies that we've used over 14 years of experience and our strategies that we use today in our live trading room where we show live profits as well. So that webinar starts tomorrow at 8 p.m. Eastern. Sign up for it. This is pretty much your second last chance. And then tomorrow, I'll give you guys another brief update and our midday update, and then we'll shut down the registration period for that. It's tomorrow at 8 p.m. Very excited to give you this webinar. TradeProAcademy.com/trade oil. It's going to be a phenomenal event. You're going to learn a lot, and I promise you, you're going to learn stuff that institutional traders use to make money and you won't find online. Okay, this is stuff that it's not, oh, here's a double top short here and you want to see volume follow through. All right, that's 90s. Great. You could have made money with that in the 90s. In today's world, it's a whole different approach, and you need a whole different set of tools and analysis to be profitable, and I'll show you some of that tomorrow. All right, join us. I hope you enjoy it. Now, let's get back to our analysis of the markets. Here's what Janet Yellen said today. So at 10 o'clock, she testified in front of the Senate and basically gave senators an opportunity or a chance to grill her. Right, so she'll do her testimony in a prepared statement, and then after that, they slip into Q&A until 12:30 p.m. Eastern. So she's been talking from 10 a.m. All right, and these guys are just stepping on her with these aggressive questions. She's coughing and choking because she's talking for so long. They're just not letting her breathe. They're going rapid fire on her. A lot came out of that meeting, but I'll give you the most important and pertinent info that you need for your trading. So as she did this testimony to Senate, tomorrow she goes and testifies again the second time. All right? And this time she's going to the House. And what's going to happen is she's going to give the same sort of prepared remarks, but the Q&A is going to be different. So now you got to watch the Q&A tomorrow. The statement has been made, and I'll show you what the statement is. I'll read out some of the highlights. She said ultimately they want to shrink their balance sheet, the Federal Reserve. They'll eventually be substantially smaller, but can't put a number on it. What does that mean? Over the last several years, since 2009, the Federal Reserve has been out there purchasing assets. These assets are in the form of mortgages, okay, mortgage bonds. And what they're talking about is, in order to stimulate the economy, they've amassed over $4 trillion of assets on their book, which means they own a crap ton of mortgages. I can tell you any trader that's been trading for longer than 3 or 4 years, that's done it professionally, knows this one reality and appreciates this one reality. When the market's going up, it's really easy to build up a big position. I'm talking huge, sizable, massive position. When the market starts to drop, and it only takes one concentrated event to spook it out, bids disappear. People stop buying. They move out of the way, and it's so hard to work your way out of a large, long position because nobody's willing to buy it. In order for you to sell, there have to be buyers. Buyers aren't up here. They're going to continue to buy only when price slides on you. So when you build a long position, getting out is really challenging, very challenging. Institutional traders struggle with that the most, getting rid of their institutional clients' book at a really high average number. That's their goal. That's their challenge on the institutional side. All right, well, the Fed has the same challenge with a $4 trillion balance sheet. So what Janet Yellen said today is she's going to let these assets roll off. She's going to let them mature. That means they're planning to hold these assets for up to 30 years because there's varying maturities. I don't want to get too deep in this because I can. But what you need to know is they're going to let these assets roll off. So they're going to hold this book. That's not a massive deal, but it's neat to know that they're going to have exposure to these assets for 30 years. So they're tied down to this trade. What else did she say? Yellen also said that raising in March is not out of the question. Okay, she said March is a live meeting. Hiking rates is not out of the question. Before today, we were at 17% probabilities for a rate hike in March. Now we're above 25, almost 30+%. In fact, when I checked on it last on the probability. So the probabilities are starting to climb. The market's starting to build in the realistic chance of a rate hike in March. The expectation was not for March. They said 2 to 3 hikes, but they didn't expect March. They thought it would be June, September, and December. 1 hike, 2 hike, 3 hikes potentially, but 1 to 2 in the middle of the year. What she's now said is, hey, we never said it's off the table for March. She's become a lot more hawkish. That hawkish sentiment or a higher interest rate expectation has forced the US dollar to do the one thing it should do and rally. All right, higher interest rates means that you're going to get paid more money on holding US dollars. So the value of the currency is appreciated. When the US dollar appreciates, assets like gold and bonds and oil have nothing to do but drop. Okay, it's tough to sustain assets that have an inverse correlation. Now, let me explain that to you. A stronger dollar means weaker gold. Okay? A higher expectation of interest rates means weaker gold. We told you guys that when we got out of 1232 last week, we bought the trade at 1217, got out at 1232 on gold, and we said upside looks lofty. Be very careful. You can't hold gold long going into a Fed announcement, because if the Fed is even slightly hawkish, meaning that they're going to raise interest rates, gold's going to get creeped, and it's getting slaughtered this morning. It's down. It's getting punished. Below 1220, gold's going down to 1200, and that's where we want to try to buy it. But get out of the way. This new hawkish sentiment is going to lead gold lower, and it's going to continue this rally in the U.S. dollar. We're now targeting 103 on the U.S. dollar front. That's what you need to know. That was a game changer this morning, because Janet Yellen's always been dovish. All right, super dovish. What does she mean to be a dove? It means she believes in more stimulus, lower interest rates for longer. And she was so dovish that she was hard for her to be even more dovish. So what today's speech did effectively, it pushed her into the territory of being a little more hawkish or a little more aggressive on interest rate hikes. That interest rate hike has positive expectation for the U.S. dollar. Donald Trump, however, Donald J. Trump, the DJT, wants a weaker U.S. dollar. He said that openly. So now you're starting to see a little bit of headbutting here from Yellen and what she's doing with her policy, and Donald Trump and what he's expecting and wants himself. All right, who did the Federal Reserve lose last week? Dan Tarullo. Dan Tarullo was one of the biggest guys for bank regulation. That was Obama's front man to head the regulatory field and banking sector and the markets. He's gone. All right, today Yellen just got creamed getting asked questions about regulation. Regulation this, regulation that. Dodd-Frank, if it gets repealed. Banks lending, taking on excessive leverage. What is she going to say? Obviously, she's going to say she doesn't like it, but that's Donald Trump. He's the president. He's the one that's going to roll out his platform. Donald Trump has now the potential to have 3 new seats filled on the Federal Reserve. Donald Trump will shape how the Federal Reserve looks for the next 10 years. Think about that. Okay? So that's what's happened here. It's very important. If you don't know that, or you didn't know that, you need to be a little bit more diligent with your analysis and reading up. All right? You got to stay on top of this stuff. So why is that good for S&P 500? Higher interest rates is technically not good for it. It should be bearish, the S&P 500. But think about what that says. Right now, nothing can stop the equity market. Don't look for reasons to short the thing. All right? Stop looking for reasons to short the S&P 500. I don't know why our Dow's not working. Let me just refresh this page. All right? It's easy to find anything out there in the media and say, I want to get short, and it's easy to find a reason to get short. Don't look for a reason to get short. Look for the truth and take the right trade. All right? It's called confirmation bias. When we think and when we want the market to go down, usually we want the market to go down for one simple reason, because we're not long. If we're not long, we want the market to go lower. If we want the market to go lower, it's easy to Google a few articles to prove that. If you want it to go higher, it's easy to Google a few articles that prove that thesis out there. So you're looking for confirmation of your bias. That's deadly. You're going to get cleaned out of your account. All right, you might as well write me a check. I'll take it from you. But what you need to start looking is, stop trying to clobber this market and look for reasons to short it. Don't fight City Hall. Right now, the trend is up. You're seeing higher lows, higher highs. You got to get on board. Pick a spot and just buy the darn thing. But be careful. I'm not saying buy this high. I'm saying, look, it's looking a little toppy now. It might come off a little bit on a daily. Try to buy it down here, find a good support level, and try to trade higher. Shorting it right here, you might be right for a few moments, and you go to work, Alt-Tab, and you come up, and the market's back to all-time highs. You're kicking yourself. Oh, why did I lose? Because you're taking the wrong side of the momentum. There's a train flying down these tracks, and you're stopping in front of it and saying, I know I can stop this thing. I got it. Good luck. All right? Good luck. And it's coming around a bend, so it doesn't see you until it's too late to break. That's the analogy, unfortunately, as graphic as it might be, of what it's like trying to short this thing. So the reason I say this is, yes, the market should be weak because of an expected interest rate hike, unless you look at it this way. You say, hey, you know what? Well, the Federal Reserve believes that they could support 2 to 3 rate hikes as early as March. They must think that the economy is doing well. If the economy is doing well, let's boost this market higher. Let's buy. And that's what's happening. Let's look at it on the flip side. If they didn't cut, or if they were dovish, they'd say, hey, guess what? Free money for longer. Yay, the party continues. What's happening here is there's a lot of money piling into long equity, and you can't fight this thing. From a seasonality perspective, you could expect this to go until May. There's going to be some rally opportunities. I don't doubt that there's going to be a sell-off coming at some point. It's going to be a large sell-off. 10% drop in the market plus is overdue at some point. But, and I say this with a big capital but, all right? But people have been saying that since 2011. All right? What purpose does it serve you to guess a 10% drop? I don't get it. If it's up 90% and it's a 10% drop, you could say, yes, I was right. I finally got this 90% drop. People are getting killed in the market. Yes, carnage, I'm right. But guess what? They made 80%. They're down 10. They were up 90. You missed out on this entire 80% opportunity just to catch us 10% short. All right? Stop fighting this thing. I know it's hard, but that's what you got to do. You got to stop fighting it. If you're going to short it, keep your size 1/2 of your full position. If you're usually shorting with $5,000 risk capital, or if you trend trade to $5,000 risk capital, you better make sure $2,500 is your risk capital on a short, because you're going against the grain. If you go against the grain, half your risk. That's your risk management strategy for success. Okay, people always want to know, what do I look for? What's my checklist? When do I get in? That doesn't matter. It matters how I manage risk. Okay, we could both be long at the same time and short at the same time, and I'll make money and you'll lose it. And then you'll say, well, we got in at the same level. It's how you manage risk that matters in this darn thing. So if you're shorting, short small size, wait for entries on the dips, try it longer. Look, right now, NASDAQ's higher. Okay, Russell's trying to push higher as well. Dow Jones is flying higher. Volume isn't really 100% on board yet, but it's getting there. S&P 500 breadth, you can see percentage of stocks above the 50-day moving average. Like where they're going. It's above the 70. I think we're out for these 80s now. All right, on the 100 front, we broke the 70. Nice clean break above this consolidation. We're going for these 80s. That means there's a lot more opportunity to get in there and rally. Okay, let's look at the S&P 500. And I'm still reading articles about people shorting and saying the market's going to go down. It's due for a 20% drop. As long as they're shorts, keep buying the thing. Because what does that mean? If there's a lot of shorts to get out of their trade, what does that mean? They're actually buy stops, which means they're buyers. So these buyers are going to start chasing the trend higher and higher. And until every single last short gets squeezed out and loses the money that they used to short, we're going to continue going up. When you find yourself, it can't go any higher. When you find yourself saying that, flip it around and tell yourself, wait a minute, how many other people are saying that? Or if you're not long and you're angry that you missed this trade, don't be short just because you're not long. Ask yourself, if I was long at 22.80, would I sell here? Ask yourself honestly, if I was long where I wanted to get it, I was the perfect trader that I'm trying to be, and I get long. And now we've run up, what do we run, 28, 30, 50 points higher. Would you sell here to lock some profits? I think a lot of you would say yes to that question. All right. If the answer to yes, you selling to lock profits, if that's your answer up here, why in the heck would you buy it now? Why? It doesn't make sense. You're selling. As a buyer, you're selling. But as a buyer who didn't buy, you want to buy. That doesn't make sense. Okay. That's what I'm saying. Don't buy it here, but don't short it hoping for this massive drop, because it ain't going to happen. It eventually will, but you're going to go broke trying to chase this thing. Look, we set out our target. I flipped these by accident. Whoops, I should say bullish. Our bullish target is 23.36, and we just about got it this week. 23.32, 31.8. All right, there it is. There's a target on Sunday at 8 p.m. to our subscribers. I gave them that level. There it is. We're close to it. Just be cautious. All right. From a momentum standpoint, you can see the momentum's back on board. RSI's back into overbought. MACD's starting to cross positive. Momentum's now on board. I think we get some more opportunity to run higher. I would probably say 2360 on this upside cycle is possible. You can see this blue line here, 2329. That's fib extension. 242170. This is also fib extension. So watch resistance at 2420 about 2400. That's the next target as we climb up here. Can we fail and not get it and head back down to zero on the S&P? Anything's possible. And I can tell you this, just because I have these bullish targets, it doesn't mean I'm not trading the downside. I love trading the downside. It's where I make a lot of my money on the short side. But I'm not in here being greedy, shorting it every day and hoping for the best. Ask the guys in the trading room. The last few days we've been long. This morning we said, let's get short. We got short in the morning. We caught the reversal. One of our Trade Pro subscription members caught the 2320 on the S&P 500. They got long there. Look at this. I want to show you where that is. One tick above the low of the day and caught this rip. Caught it back up to the VWAP. I was long as well for this. Didn't ride the whole thing, but I got some profit. The point is, don't let your bias dictate your trades. Check in your bias at the door. Your bias means nothing. I know at your 9 to 5, you've got to be right in order to make money. I know your boss relies on your accuracy. In the market, you don't need to be accurate. A lot of our strategies have a 33% expectation. That means if you win 1 out of 3 trades, you're breaking even, which means you could be wrong more than you're right and still make money. Give that a bit of a thought for a pause for thought. All right, that's that. We're going to move to the subscriber piece. I want to end it off here and tell you guys VIX is low. Okay, so risk at the moment is low in the markets. Perceived risk or future and expected risk is low. Not much fluctuation. Volatility is expected to stay low. Equity markets continue their high. All right, equities onto new highs. Oil kind of holding in the middle of this consolidation. Can't get above 54, but can't stay below 53. I expect oil to continue bullish, but we'll save that for tomorrow's update. Okay, market breadth chugging along, and U.S. dollar strong against all currencies. Look at this. Euro slumping. Dollar Jap yen higher. Dollar CAD is holding some of this around 131. Australian dollar range bound. Euro's getting creamed the most against the US dollar. All right, dollar's strong. So look for retracements. Buy the dollar, sell the euro, but not now. It's already too late. Okay, good luck. Good trading. Oh, I want to tell you one story before we left. Tell them about the oil class again. Yeah, Steve, good point. Before we go, you guys need to sign up for this oil webinar. It's going to be tomorrow at 8 p.m. Eastern. I'm talking to you guys, free market update, and I'm missing a massive move on ES. Anywho, it's tomorrow at 8 p.m. Eastern time, February 15th. We're going to talk about everything you need to be consistent to trade oil for profits. You will not see anything you've seen before. That I promise you. You will see things that are so new to you that you'll question whether or not you're new trading, and you might be doing it for a decade. This is not the kind of stuff you're expecting to see. I promise what I'm going to show you is going to be borderline mind-blowing. All right, and it's a free webinar, 8 p.m. Eastern time. I'll basically show you how to trade oil futures, how to look for patterns, some of my personal rules, all right, how to keep your risk low and make potential of triple, quadruple a day on the risk that you've taken, and a ton of other stuff. All right, where to get into trades, when to know if an uptrend is going to reverse or if it's going to continue. Should you sell on the upside? Should you sell a breakout? When to do that, when not to, when the pits are active, when there's volume. There's going to be a ton of stuff. All right, there'll probably be an hour and a half webinar. So schedule for that. Join it. Go to tradeproacademy.com/trade oil. All right, and I want to end it off on this note before we go to the subscription part of the broadcast. This morning, I was talking to one of our members, one of our trade pros, that I would say is probably the hardest. I don't know, but it was one of the hardest working people for sure, hands down. I remember we were chatting and we were talking about the trades in our live trading room. And we were saying, well, this is great. You know, where does everyone live? And I said, Melbourne, Australia. I said, holy smokes, that's got to be 4 a.m. over there at the moment. And what she said to me was one of those moments where this is what I do it for, guys. Like it made me soft, sort of. Not soft like that, but it made me soft for the person, because that's amazing. That's what it takes. They said to me, hey, you know what? I've been running on an hour and a half sleep, but this is what I got to do to make money. And I remember when she emailed me initially, she asked me a lot of questions. Do you think I could do this from Melbourne? Do you think I could do this? I said, Jordan, you know what? It's up to you to decide. It'll be a tough schedule, but it's possible. Trading the ES futures where the liquidity's at. If you want to do futures trading, the US session's your best bet. If you want to do options trading, US session's also good. If you want to do currencies, then you look at maybe some of the markets that are aligned to the Australian time zone. She said, no, screw it. I'm just going to go up, wake up in the morning, do this thing and trade. And today we asked Jordan, hey, you know what? When are you going to get some sleep? She said, sleep. I'm probably not going to get much tonight. I have a tee off at 7 a.m. I loved it. I died laughing. So that's what it takes. You got to go in the trenches and you got to grind. You got to work. All right. You got to roll up your sleeves. I could tell you, if you're looking for an easy way, the only thing you're going to find is the wrong way. All right. Don't look for the easy way out. You got to roll your sleeves and work hard. And this should be motivating for you. No matter how many hours you work, know that there's people that work more than you, that work harder, that put in more time and effort. And that should motivate you. All right. You should get competitive. It was no surprise to me to find out that Jordan was competitive in golf. Right. She said, I'm a very competitive personality. It's what it takes, guys. You got to check into the morning and you got to fight through blood, sweat, and tears every single morning in order to be profitable in this business. If that's not what you're signing up for, then you have no chance of being profitable. I wouldn't say no chance, but close to no chance, because that's the people you're going up against. All right. You're going up against fighters, and I want you to fight. And I know you can do this. Come to our webinar tomorrow at 8 p.m. All right. Meet some people that are just like Jordan. Jordan will probably be there too. She doesn't sleep. Meet people that do this for a living. We trade in a room live every day. We show all of our results. We all learn as we go. Okay, you're going to see my trades that are good. You're going to see some trades that are stupid, some trades that are bad. And I'm going to be honest with you about that. You got to see losses. You learn more from losses than you do from gains and winners. So join us there. Subscribers, hang tight. I know I made this a little bit of a long-winded intro, but I want to show you some trades for the afternoon. There goes S&P back to above the 2329s, which is yesterday's U.S. session high. So we've actually hit, I think, record highs. YouTube, have a wonderful afternoon. Remember to go to tradeproacademy.com/trade oil. Join us for a webinar tomorrow at 8 p.m. Be careful out there. Stop trying to fade this market. Look for good buys. Careful for bonds. Bonds are weak because of Yellen. Yields are higher. Gold is going to continue to slide below these 1220s. Watch for 1200. Dollar index is strong, and I think it'll continue to strengthen. Okay, oil, I think it'll hang around this camp in the middle of this range for the next couple of days before we escape. Okay, and I'll talk more about oil and the state that it's in tomorrow at 8 p.m. See you there. Have a great afternoon. Subs, hang tight. Let me, yeah, it's a free webinar. Forgot to mention that. It's absolutely 100% free. Somebody asked, is it free? Yes, the webinar is going to be free for everyone. Okay, and the info that you learn, it's going to be so great that you're going to write me a check anyways, but it's free. No, you don't have to. I'm just 100% kidding. Come out, check it out, 8 p.m. tomorrow. Take care, guys. Have a good afternoon. All the best. If you have any questions, email me. I'd love to help you out. Take care. Goodbye.